Sam, thank you. I appreciate that, and I would like to thank everyone for listening today, and BOL Learning Connect for helping put this together. We've got quite a bit of information we're going to be going through today, and as Sam mentioned, the information that I submitted, the training manual, will also go along with these slides. I will briefly tell you page numbers in case you lose reference, but it does run pretty well along with the slides through the presentation. So having said that, we'll go ahead and get started. Basically, just quickly, a little bit of information about myself as we get going. I am a certified residential appraiser in the state of Tennessee. I've been working in the appraisal industry since 2004, got my certification in 2006, and worked with about a $5 billion bank from 2008 up until 2011. When I was there, I served in a supervisory role, pretty much served the role of a chief appraiser, although I was never given that title. I ordered appraisals, went to all the reviewer and chief appraiser committees and meetings, and then also went to the RMA conferences, also reviewed the majority of their appraisals there and gained a lot of experience in that field. In October of 2011, I left that position and decided to go out and start this company, Appraisal Advisory Associates, and I actually teach and train regulatory compliance to a number of bankers associations and banks throughout the United States. Also do a lot of review work as well. So that's just basically a little bit of information about myself. Let's get on into the program, and this program is geared to apply to residential and commercial appraisals alike, and evaluations as well. So in case some of you guys were wondering if this will apply to only one or the other, it actually applies to both residential and commercial. Let's get into a brief history of Title 11 of FIREA, the Guidelines, and Dodd-Frank Act. Title 11 of FIREA was actually enacted in August of 1989. That act resulted in the following actions from an appraisal standpoint. It required all the individual states to implement state licensing of appraisers. Up until that point, you did not have to be licensed as an appraiser in a state to perform appraisals. It also required the appraisal foundation to serve as the authority for establishing the standards, including real property, personal property, business appraisals, tax assessment, all of those aspects of appraisal. And this was known as the Uniform Standards of Professional Appraisal Practice. It's also called USPAP. You'll often hear appraisers refer to USPAP or USPAP in some areas. It also required the appraisal subcommittee to monitor the compliance with those states to make sure that they were actually requiring their appraisers to be certified. In November of 2008, the proposed Interagency Appraisal and Evaluation Guidelines came along. Up until that point, since FIREA was enacted in 1989, there had been several different updates and amendments added to it, but there had been nothing since 1994 issued jointly. Each division, Federal Reserve, FDIC, OCC, NCUA, and OTS at that time, they were issuing their own updates, and in November of 2008 the agencies decided to get together and submit a proposed interagency and evaluation guidelines once again so that everybody was on the same page. For the next 2 years, anybody that was involved in the real estate profession, whether it be appraisers, realtors, loan officers, bankers, investors, even individuals, were urged to send in any of their questions, concerns, comments, criticisms, anything that they wanted, and they were all considered and even discussed among the agencies. And then on December 10th, 2010, the final Interagency Appraisal and Evaluations Guidelines were created. If you do not have a copy of that, I strongly suggest that you go out on the internet and download an electronic copy of it. Print a copy off for your reference as well, but I've actually started advising folks, if nothing else, go out and download an electronic copy, put it on your desktop so you can refer to it. If you're doing a lot of review work or ordering appraisals or a combination thereof, It is a very handy reference, and all you've got to do is go out and Google Interagency and then the letter AP, and it will pop up. It's a PDF. It's about 70 pages, and I strongly recommend you get that for reference. Going right along after that, let's get into a little discussion of the Dodd-Frank Act. I've got a few quick notes up there. When the Dodd-Frank Act, it's actually the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010 came along, it made several different changes in the industry from an appraisal standpoint. A lot of those changes, as you guys are probably aware of, are still being made today, and several of them will still be made into the future. But some of the first ones, the changes that were made, was it added the heads of the Bureau of Consumer Financial Protection and the Federal Housing Finance Agency to the Appraisal Subcommittee. So it added 2 new members to the subcommittee. It also indicated in the Dodd-Frank Act that appraisals shall be subject to appropriate review for compliance with USPAP. Up until that point, it was not an indication that they shall, it was they should. However, now going forward, you need to be getting all of your appraisals and your evaluations reviewed, and appraisals need to be reviewed for a minimum of compliance with USPAP. That's a big part of what our discussion is going to be about today. It also defined AMCs, appraisal management companies. For those of you that are not familiar with what an AMC is, we may hit on that a little bit today and kind of discuss it as a third-party option, but we won't be spending a lot of time on it. It also indicated that state appraiser certifying licensed agencies may additionally include the registration of supervision and addition of information about the AMCs to the National Registry, and it also developed the minimum requirements for AMCs. A lot of you may be kind of concerned or asking about the upcoming changes, and I don't have a slide in there for that, but we can kind of discuss those a little bit today. As you know, Reg B and Reg Z are going to be making some pretty big changes from an appraisal standpoint in about the next 3 months, January of 2014. One of the key things that we want to focus on from a review standpoint today is regarding the higher price mortgage loans. Appraisers are going to have to know whether or not this is a higher price mortgage loan. They're going to have to know some information about it. And if it is a higher price mortgage loan that the appraisal is for, the appraisers are going to have to do some additional analyses in the report that they normally wouldn't have to do. And those 3 different analyses are a more thorough analysis of the sales contract. And this is if the property is selling again within 180 days of its prior sale. There are 2 different variations on that, but if it's basically within the last 180 days, then the appraiser is going to have to do a more in-depth analysis of the current sales contract. They're also going to have to do a more in-depth analysis of the previous sales contract. And as a reviewer, you're going to have to know that in advance. I strongly recommend making some changes to your evaluation or your appraisal review forms before that deadline gets here. Another thing that they're also going to have to consider and do a little more thorough analysis of is the market information, if there's been any market condition changes since the previous sale. And the third one is in regards to any upgrades that have been made to the property since the previous sale. So the appraiser is going to have to know several of these new items, and they're going to have to be able to do a more in-depth analysis on that. From a review standpoint, you as the reviewer are also going to need to know that so that you know exactly what you're looking for. As I mentioned previously, we'll kind of discuss that a little more when we get into the forms, but I would strongly recommend making some changes to your forms for that. If we'll move on down to the next slide, and right now I am actually on pages 4 and 5 in your manual in case you're needing to get into that. The Title 11 FIREA also states that other than some limited exceptions to the appraisal and evaluation requirement, FIREA requires that all secured loans, regardless of the loan